Let's just begin on the data out of China. Some really impressive stuff here. The reopening obviously now being reflected in the Chinese economic data. The manufacturing PMI at its best point in a decade. I guess it kind of begs the question, how sustainable is this recovery that we're seeing in the data, and where does the momentum move from here in your view?
So I guess that there's a couple of things, right? Yes, the reopening definitely helped. We also see that the economies of the US and Europe are stronger than we thought, and consumer spending is still stronger than we thought. So that's also helping the Chinese manufacturers, of course. We also know that after the big miss last year on the GDP, it's all hands on deck in China in terms of the regulators, in terms of the government, to try to make sure that 2023 is on target, or at least above target in terms of growth. So I think the market is seeing all of these as positives, and right now in China, positive economic news is good news for the market, whereas elsewhere, as we know, positive news for the economy is bad news for Wall Street or European markets. So it's kind of a timing issue.
Yeah, very good point. So where do you think we go from here? Obviously, we're seeing markets react very positively to this today on the Hang Seng in Hong Kong, but also mainland equities getting a boost. Oil also seeing some decent momentum here off the back of this. So do you think this is going to be a positive catalyst for markets through March, or are there some things that investors should be worried about out there?
So, there's still some things to worry about, that's for sure. Hong Kong had a horrible February. It gave up all of the 50% gains it made in January. So it's not surprising to see it rebound now on positive news. I think we need to see what the target for GDP this year is. What is the government going to set it at for China? If it's something reasonable and attainable like 5%, or is it going to be something outrageous that investors are going to see as a struggle to get to? So I think there still is some concerns that this is, kind of like a dead cat rebound type of thing. But they need to see what the guidance is, what the targets are for this year before they can come up with, a probability of meeting those targets down the line. So I think we're just having a rebound now because February was such a bad month and valuations have come down. But they're going to need to have more positives for both sentiment and markets to go back to new highs.